Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the Bitcoin and Ethereum charts after the strong sell-off that we've seen and some volatility which has come in. So let's take a look at the charts right now. Let's go. We are on the Market Intel website, dailymarketupdate.com. You can register completely for free and you get daily access to these free Elliott-Wave updates that come in every single day. Let's click on the cryptocurrencies section and we select first of all Bitcoin, and then we can cover Ethereum as well. And we start with the daily time frame. So let's take a look at the Bitcoin daily chart. Here you can see the basically unchanged structure. So Bitcoin is basically doing what we highlighted in previous videos. People started to talk about bear markets and bearish structures, and Bitcoin is going back into the bear market together with the crypto sector. There is no objective, reason to believe that Bitcoin is still holding above support. We can talk about more bearish scenarios once support is broken, but you can see it on the chart. The $47,000 level is still unchanged. The 50% retracement, which is relevant for such a pullback on the Bitcoin chart. As long as we're holding it, there is no bearish outlook, but at the same time, that is our risk level. So if we are far away from that level, naturally, risk is higher. If we're getting closer to that level, risk is lower, because that is basically the trading area where anybody who's looking for long positions could look for an entry. I mean, it's up to you if you do it, but that's sort of the main trading area here on the daily chart. From here, expectations are at some point for the price to rally in wave 5 of a larger third wave, and then eventually to get into that $100,000 plus area. Important is to, I think, note the next Fibonacci support level as well, which is at $52,217. That's normally actually an ideal target for a fourth wave, this 38.2 retracement. So we're not there yet. We might get there. And let's take a look at the 4-hour chart, the smaller time frame, because here we get a little bit more of a detailed view. And you can see again, third wave topped in March. I think it was the 13th or 14th of March. Fourth wave pullback is considered a complex correction, a WXY correction, in the Y wave then an ABC. You can see that the market is heading down nicely, possibly targeting 52,216, but that's not an absolute must. So the price doesn't have to go down to the 38.2 retracement. It's possible. And it's actually, if you look at, a range of wave 4 corrections, let's take 10, 20, 30 wave 4 corrections, most of them would sort of terminate around the 38.2 retracement, but there's no need. Bitcoin normally doesn't like deep wave 4s. Bitcoin tends to form very shallow wave 4s only. At least it's often been like that in the past. Now again, below $47,000, the overall forecast might have to change, but that's also below that level. Typically, if you just trade that setup, that assumption, you would normally set a stop below the 50% Fib level, maybe 1 or 2% below that level. Now let's take a look at the daily chart for Ethereum. As you can see here, also here the expectations are unchanged. If you recall my commentary from the last video, maybe a week ago, I explained to you that the wave 2 is likely still unfolding on the daily time frame. We would not be surprised if the price tests the trading area again, which is defined between 2,800 and 1,813 USD. Again, below 1,813, we have to, redo the count or reinterpret the chart. But at the moment we are holding above it. There is no bearish outlook for ETH, but a wave 2 can be deep. But I would not expect necessarily the price to get there. I think it could be sufficient for the price to just test the $2,800 level again, or 2,500. Just a slightly different structure. Eventually actually more bullish, because the next rally here would be a third wave, whereas on the Bitcoin chart it's a fifth wave. So it's just a slightly different structure. Doesn't mean it's bearish for Bitcoin. Both are bullish, but Ethereum actually has a little bit more growth potential, because the third wave is typically the strongest wave in any Elliott-Wave cycle. Upside breakout point at $4,091. Very, very critical. And then looking at the 8-hour chart for Ethereum, here you can see the more detailed wave count. Yeah, we can say that alternatively, with a probability of 30%, the low is already in for Ethereum in this wave 2, because we basically touched that trading area already, but it would have been a very shallow wave 2. So preferred interpretation with a 70% probability is for the price over the course of maybe the next couple of weeks or so to go down a little bit lower and then to turn around there. Either way, both scenarios are bullish, but in the preferred scenario, we expect a little bit more downside before this wave 2 is is finished. As I said, possibly around $2,800 or $2,500. At the moment, the micro patterns are bearish. So the trend is down, especially here, especially from the May high, the trend is down locally, but it's all happening within an overall bullish scenario. So overall, not really any change to the outlook for Bitcoin and Ethereum. For both of them, still a bullish market, still bullish structures we're looking at, and in my opinion, no reason to panic. Obviously, risk management is key as always, so have your stops in place. That's the update about Bitcoin and Ethereum. Hope you enjoyed the update. If you did, please leave a like, comment, and also subscribe to the channel, and don't forget to activate the notification bell or you will miss videos which you don't want to. Okay, see you next time. Thank you very much. Bye bye.